Good evening, all. Ira Epstein of Linn Associates with your metal market wrap-up for one very volatile trading Tuesday, the last day of November. This is the 30th, 2021, just getting on to 6:30 at night. I got to tell you, I've been around this 5 decades. Today was unbelievable. It's one of those flash crash days again where the market is wild. We have to watch what's going on. Fed Chair Powell spoke today along with Janet Yellen in front of the Senate Banking Committee, and he deviated from what his text was, saying very clearly the Fed is dropping the word transitory on inflation. That won't be in the parts anymore. They have inflation at hand. They have to fight it, and they're going to accelerate the tapering process. Now, what could stop it, of course, and this is what he said in his prepared text, was Omicron, how serious it gets, but he didn't say that today. And the markets, you were down 600 points in the Dow and relative amounts in all the other indices. The gold, I pointed out this morning as the market was near 1,800 or so. I said, you know, folks, we start off each day strong and it gives it up later in the session. It happened again today. What's frustrating to the gold bulls, and I'm neither a bull nor a bear, I'm a trader, there's a very big difference between that, is that you hear all the word of inflation, the Fed's changing its game plan, yet the thing that gold thrives on is inflation. It's not going up, and the dollar was even lower today. That's what you're dealing with. So when you look at gold, it's, for the moment, staying under the 18-week average of closes. It's under it by about $15. It's down $11 on the week, 0.63. This is how it's open already for Wednesday. You're knocking on the door again of coming down here. We had an outside day down. So again, we get one of those interesting setups. Let me tell you what this is. If you take out the high of an outside day down, within 2 trading sessions of it occurring, it's normally a sign of a reversal about to happen. I'm doing a special course on it. I've had to put it on the back burners. I'm doing so many other things, but I want to get it done, and I'll probably move it to the front burner maybe as early as this week to try to get going on it again. You've got lower highs, lower lows, bearish. The market's under the 18-day average, bearish. So you've got the bias down, you've got the trend down. The support comes in at 1756.20, which is the lower Bollinger Band. So all things being equal, if the market continues down, a target number. The market is oversold, not embedded. In fact, if I go back a day, and that's what we should do, we should go to Tuesday, neither of these numbers together were under 20. Tonight they're under 20. We don't know where the market's going to finish. It takes several days to embed, which means you convert the market from being oversold to locking in a new downtrend. We'll see if that happens. If the market continues down, as I said, 1756.20, and I'd be looking at today's high of 1811.40 is the key number over the next 2 days that if you get through it, it'd be a signal the market's through on this downside break. That doesn't mean you'd start an uptrend, but that's how I'd view that part. The gold-silver ratio reached a peak and pulling back a little tonight, which means silver's gaining a fraction on the gold. Oversold, not embedding here. You've hit the lower Bollinger Band, so the downside targets have exhausted themselves. I think those that were bearish this market over today and yesterday have covered their shorts. That doesn't mean you can't go lower, but I think the smart money play is they're out of that market. In the copper market, as I've said, and I'll keep saying it, I think you are caught between the upper and lower Bollinger Bands. You're just back and forth in here right now. You still have a supply shortage of copper. You've got low LME stocks. The question is Omicron so bad that you hurt production again, or does it become possibly a dominant form of the virus, replacing Delta, but it doesn't have as bad an impact? In other words, you don't get as sick on it. That can happen too. There's so many unknowns, people just don't know where they're at. What sank the market today was the Moderna chairman came out and said that he believes the efficacy rate of the current vaccine is going to drop dramatically. What's dramatic? I don't know. But does that mean it doesn't work? That was what the market took it to be. He did that this morning, I believe it was in London Times. The Financial Times carried the story, and bang, at 3, 4 in the morning, I'm going, what's going on? If you saw my morning video, I even said that. I said I couldn't figure out what was going on. This is about 3 in the morning. I always wake up, take a snapshot of the market, and try to go back to sleep. I'm going, it's down 400 points or so. I said, I was rubbing my eyes. Well, you can see what went on. You're still running the downside, and are you embedding? You can't count today as I teach. So we go to Tuesday's action. Both numbers are under 20, both under 20 the day before, not under 20 the day before, both of them. Tomorrow's the key day. And right now the market acts like it wants to embed. Most times you don't. Let me just explain that to you. You get very oversold. That's what it takes to get embedded. You first got to get very oversold before you lock that in. So we'll see if the market tries to put on a rally tomorrow or not. In the palladium market, oversold, hit its targets. I think it hit them back here. I think this is the gravy money for the traders. Again, you're building in all the Omicron idea that the economies are going to shut down, people can't go to work, it's going to be a worst case that we thought it would be. We don't know that any of that's true, but you've built it in. So that is something that you have to deal with. And then in the dollar, I know yesterday when I was with you here, we were looking at this market, and this is just how it had finished. The market hadn't reopened yet. And I said I'd be very careful if this market, it's acting like it wants to lose its embedded reading, and the euro had already lost it in the early evening trade. Now, losing it in the early evening trade at 6 at night, 6:30, doesn't prove it's going to stay lost. But it was a warning signal. Where do you go if you lose that reading? Typically, the 18-day average of closes. You tell me what this market did today. That's the advantage of understanding the enhanced Bollinger Band course. And you know, being Cyber Week, I'm giving that course away for free and or your choice, my regular charting course. My regular charting course really teaches you the 5 elements of what I do, the disciplines. It's the base. And then from there, you take, like I've done the enhanced Bollinger Band course, now I'm going to do the outside day course for you. So each one builds on themselves. A 1-year subscription to any of my research products this week only. And what you get is your choice of one of those courses. Tell us when you want it to start. We'll do it. You get everything with it, though. You get my written updates when you'll do this for a short period of time. You're going to be able to see how I teach, what I teach. The videos in the full course, there's maybe 50 hours. I mean, it's quite a course. You really learn a lot with what's going on in it. And I have a unique way of teaching. I keep building on the same thing because that's how you learn in school. You don't learn by jumping from page 5 to 30 and think everything in between, I'll catch up on it later. It doesn't work that way. But I make it fun. I walk you right through it. So how do you get this? It's simple. It's not on the website. Just take your cursor, move it up here. When you move it up into this area at the top, click if you don't get it. You'll see an icon show. Click on the icon, fill out what you want, and away you go. Is that simple enough? I'm Ira Epstein. You have a good day. I'll see you tomorrow.